412 is where the Nifty is now trading at. Amit Gupta is Senior Vice President and Fund Manager at ICICI Securities PMS. He's joining in. Amit, good to have you with us here. Thank you very much. You know, last couple of days we were seeing slightly sideways, small pullbacks here and there. Will that sort of price action continue to develop, or you think, well, you know, just turns right back and starts moving up again? What's the sense? I'm talking slightly more near term here.
So I think some more consolidation is possible, which is not bad for the market, because I think if you look at selectively some of the Nifty stocks and some of the non-index stocks, because this is a time when the broader market slowly will again come back, and the large cap stocks possibly they may go into some kind of consolidation or some kind of profit booking. And I think because the global markets, if you see, so I think there is some pain definitely there, because the bond yields in US have surged very sharply, and that is where I think some kind of profit booking we are already seeing in the global markets, and some reaction definitely can come in our local market. So this is a time when you need to be there more in the non-index stocks, and I think very, very selective Nifty stocks now.
Okay, all right. Hi Amit, good afternoon. Amit, name a couple of stocks, right? Places where you all have increased allocation, or maybe a couple of stocks where you have decreased allocation. So we get a sense in terms of how you're viewing this markets right now.
So I think when we look at from the decreasing angle after the China, because there were some hopes that kind of stimulus will be given in China, and then there may be some revival in the metal stocks. But still, if you see the landed cost of the metal in India, it is still lower than the domestic steel prices. So I think that is where some kind of pressure is going to be there on the metal stocks. Value-added steel, that can perform, because that is where you garner better margins. But otherwise, we have brought down our positions in some of these commodities. And I think commodities can remain little lower, because crude has come up. But eventually, if the demand from China is lacking, I think commodities again can decline, which is good for us. And I think there are many crude related stocks, which are also some building materials. They can perform better. I think the domestic story going ahead in India, particularly from the tourism perspective and the festivals, I think that is where we need to focus more. I think the coming 4 or 5 months, we also have the One Day World Cup. So this is where tourism stocks can perform. So hotel is one category which we have added recently. I think these stocks, they had not performed in the last 6, 7 or little more period. And that is where I think after this consolidation, when the market, even if the market has come down, I think this sector can pick up the strength. And we know about hotels that every year, some 15-20% of surge in the tariff rates are very much likely in the coming 4 years. And that is where if any company is there which may have some little bit of debt also, I think that can also be seen. For example, Lemon Tree, if you see 7,000 crore market cap approximate and 1,700 crore of debt, it could have remained little laggard in when we compare with Indian Hotels, which was a debt-free company. But now I think when the tariff rates are going to be increased, more traction, more occupancy, and I think this is where possibly in another 1.5 to 2 years, it can be debt-free company also. And this is where more alpha can be garnered from such kind of stocks now going forward in the market.
Hi Amit, afternoon, Reema here. I think one of your stock picks is Tata Communication. It's a part of your PMS portfolio. Now, while the company's top line, particularly on the data side, has been looking up, there is some concern on the margin front, because the last 2 acquisitions that the company did, Switch and Kailera, both of them are margin dilutive. Would you be worried about the weakness at the operational level, margin level? And what would be your thesis to play Tata Communications over the long term?
So if you see this company, last, I think 5 years, if you see the revenues had remained stagnant and the margins have remained little volatile, I understand that. So market has seen this volatile nature of margins in this company, and it was more focused on when this particular turnaround situation in revenues will come and the factors which will be leading this turnaround. And now that is what market has seen. And we have seen the commentary from the management also. It's already has 23% of ROS, and they are targeting more than 30% of ROS. And if you see the data revenues, as you have already spoken about, so it was somewhere in single digit. Now it is around 14-15%, and they are targeting more than 20%. Digital services is going to be part of the company more than 50%. I think this is where the growth is going to come, and that is what market was looking at. And once that looks like now, even if the valuations are a little bit steep because the stock has already participated from 1400 to now 1700, but I still believe beyond 2000 is waiting for the stock now going forward. And that is where we need to keep our positions intact. And that is what we have done. And it is definitely one of the best bets that we had in our portfolio in the recent period. And I think despite the market fall, if it is resilient, it's a good sign. And that means the market is saluting the revenue growth, which it is picking every quarter on quarter now. And that is what it will remain focused. Margin accretion, margin pullback, I think that will be extra thing that can come up on the top side, on the stock price addition now.
Okay. Amit, hi, good afternoon. Let me ask you about, of course, not just the news of the day, but I think this is going to be a talking point for many, many months and years ahead. Jio Finance is a reality now. The listing has happened. But beyond today's headline, the question is really, will the NBFC space, players like Bajaj Finance, do you really think that we are set to see some mega disruption? I mean, Jio did that in telecom, but then telecom is a very different business. Here, you are, allying to market realities in terms of interest rates, lending rates, etc. So to that extent, financial services is a different ball game. But what would you expect in this landscape? Whether you're looking at AMCs or insurance companies or lenders, NBFCs, and would that impact or influence your stock picking in this sector in any way?
So when the interest rates are still elevated, I think beyond NBFCs, you need to look at possibly the banks. It will remain a good bet, but it has also become a consensus trade. If you look at in the recent period, possibly many portfolios, they are holding many banking stocks. And that is a reason once the NIMs, have reached to that level now, and it's a little bit of shrinking we are already seeing. So I think that is where banks can go into some kind of consolidation now. PSU banks were looking better. In fact, Q1 financial year 24, we have seen 95% jump in the PAT of the PSU banks. They have come down because of the recent Adani news. But I think, again, that news came out before also, and the stocks had declined. So there may be a possibility of some higher bottom formation there. But eventually, if the profitability remains intact, even though some NIMs may not be, going higher, because when we saw the repo rate hike last time, we have not seen the home loan rates increasing afterwards, but the FD rates actually have remained intact or a little higher because they have to raise money. That is a challenge. But it's still, when we look at the return on assets, which is already crossing 1%, when we compare the valuations of these companies, when we look at the last 10-year NPAs, which are actually very low, and we look at the corporate lending book, which is growing only by 6.5%, and the average lending book in the market is around 15%. So there is a lot more room for these corporate linked banks to garner the market now. And this is where I think this is a good theme to be in. And that is what we have also done in the portfolio. We are overweight in some of the one or two PSU banks.
Okay, Amit, need to slip into a very short break. As we do that, on the other side, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. We'll also get you a few BTST calls from our technical experts. Amit, thank you very much for joining in.